I am not a financial advisor, and I never give financial advice on this channel. 100% of this content is for entertainment purposes only. Hello everybody, hope you're all doing well. It's Lane here with MetaShackle. Today we're going to be going over a couple of different charts. I'm going to start with the XRP chart because there's something on it that I'd like to show you really quick. Then we'll be getting into XLM, XCN, as well as Hbar. There's some very interesting things going on these charts that I'd really like to show you. So let's not waste any more time and let's get into the video. First off, taking a look at XRP, we broke out right here from this point, came up, price gapped right here at the yellow line, then continued upwards. But what I want you to notice right here is on this bull flag that we're currently forming, price ran into this fair value gap right here. This is a bearish fair value gap known as a SIBI, and it also formed a dragonfly doji right here in the middle. That's not a coincidence that that kind of thing happens. I know it looks coincidental, but trust me, it isn't. Now, taking a look at the XLM chart, as many of you know, we have formed this descending wedge pattern over quite a long period of time, which began during the Trump pump, which started on November 4th and ended right here, hitting this peak on November 24th of 2024, hitting the peak a lot quicker than we saw in many other cryptos. The current price action that we're seeing right now is actually forming a nice inverted head and shoulders pattern right here, which if you look very closely, we have just broken out of the top of the neckline. Now, if you look really closely at this chart, you can see that XLM is exhibiting the exact same symptoms that we just saw on the XRP chart that I showed you, running into this bearish fair value gap, this SIBI, where the price was rejected and in a sense pulled back right here into this area. This might look bearish, but to me this actually looks very bullish. The nearest weak doji waterfall that we have is right here on the charts, right around that 35-cent level. If we break through this bearish fair value gap, I would expect to see us move upwards into the equilibrium zone right here, which starts at about that 33.2 level. This may not be the easiest feat getting up to the equilibrium line right here, which is the green line in the center of the equilibrium zone, because we have these highs right here to contend with. But as you can see, this high right here during the Trump tweet pump came right up to the equilibrium line almost exactly. So watch for this to get above this fair value gap moving upwards, and if that is the case, watch this weak doji waterfall mark at the 35-cent mark. If we get rejected off of this, look for price to come back and potentially retest this breakout zone either right here at about that 26 mark, and at the very worst, look for support right here at this fair value gap, which is centered at about that 24.67 mark. I honestly don't think that that will come into play coming down to this until a little bit more time has passed, but we will have to watch this and see where it goes. As it sits right now, the XLM chart is looking very good. Taking a look at XCN, this chart looks radically different from anything else that you're seeing in the crypto market, at least within the cryptos that I keep an eye on. We had this descending wedge pattern, which is extremely bullish, which formed right here from the Trump election pump, which topped out on January 26th, which has then fallen back down to the bottom of the pattern. Price then traded on the top range of this bullish fair value gap known as a BISI right here at the bottom of the pattern, breaking out of that descending wedge, bouncing off of the fair value gap, coming up here and actually hitting the top line in the equilibrium zone, falling back, consolidating to the breakout that we saw on April 22nd, hitting the bottom of the equilibrium zone here, falling back and consolidating down here to this breakout that we are now seeing. There are no fair value gaps that I can see that really play into this very much. We do have a weak doji waterfall up here, sitting at around that 0.029, almost 3 cents range. If price can break out of this, watch for it to try and take out these previous highs right here. If it can get through the equilibrium zone, this is going to be your first target right here. That doesn't mean that it can't go higher, but this is one of the places that you're going to want to watch first. This week doji waterfall pattern down here was already filled, getting taken out at about that 0.0158 range. So outside of that, there's really not a lot going on here other than the fact that we are forming a very nice pattern right here. And as you can see, there's a few different ways to look at this. This could be looked at as a 1-2. It could be looked at as a 1, 2, 3, 4. Because as I've told you in previous videos, a lot of times we see the main breakout move happen on that fifth wave on these types of patterns. Not every time, but often. Me personally, I would look at this as a 5-wave count, being a fractal of what we normally see on larger patterns. So I would consider this to be in that 5th simple wave count. Now it's important to remember that that's not Elliott wave, that's just a simple count, counting the gyrations up and down within the pattern. You could also draw a trend line right across here if you wanted to, keeping an eye on that trend line, because breaking out of that would be a very bullish sign moving forward. So we're definitely going to want to keep an eye on this one as well, especially to where it's trading towards the top of the Gaussian channel, because it's not uncommon to see these spring off of this area right where we're seeing this doji candle form right now. Taking a look at the current Hbar chart, this is quite different than what we've seen throughout the overall crypto market. Price broke out right down here during the Trump pump, coming up and setting this high right here on December 3rd. Where it consolidated near the equilibrium zone, bouncing off of the equilibrium line in the center, coming up and setting the pattern high right here on January 17th, to which it then consolidated, bounced around within this descending wedge pattern, to which it then broke out of on April 20th. Price is coming up now and has been having a tough time getting past the 200-day moving average, which could be a bad sign if it gets rejected, but also a very good sign if it moves up on top, because there's a good chance that the 200-day moving average would act as support at that point to help give it the momentum that it needs to move up towards the equilibrium zone. We also have a secondary trend line right here, this dashed line, that is also broken through that, which is another good sign. But as you can see, like on the XLM chart as well as the XRP chart, price has stalled out at this bearish fair value gap right in this area. So there may be a consolidation where this pulls back a little bit, springs off of perhaps even this area right down here, this weak doji at about that 17.5 range before springing up and making an attempt to get through this. It doesn't have to happen, but it very well could work out that way. We also could just pull this candle down a little bit and just like a spring let go, giving it the momentum it needs to pop through, punching up through this fair value gap and heading up to the weak doji waterfall that we have right here, resting at about that 2328 level. If we can take this out, you're going to want to watch the lower quadrant of the equilibrium zone as well as this fair value gap, because if price falls back downward, these fair value gaps generally tend to act as support once they've been broken through by price. Originally, when the price came down through this, it was bearish. Once we get up through the top, it will now become bullish as a support zone. So that'll be something to watch. And if that doesn't hold, watch this trend line right here, as we do have a weak doji reverse waterfall sitting right down here at about that 16.345 level, which may or may not come into play at this particular point in time. But at some point, it definitely will come into play. It's also forming an inverse head and shoulders pattern right here that you can see, very similar to what we saw on the XLM chart and in quite a few other charts. This high right here did take out these previous highs, so if you were to put a neckline in here, it would basically be sitting right about where that green price line is, which means we would want to see price get above this and potentially test off of this area here for that move upwards to attempt to take out that weak doji. So the charts are looking very interesting, but overall, looking at this particular pattern, especially where it's broken out of this descending wedge, this is incredibly bullish. But it's also not uncommon for price to fall back down and retest off of these trend lines before making the big move upwards. And like I showed you the other day on my liquidation heat maps, there is a massive amount of liquidity resting down here below these previous lows, just waiting for the algorithm to come and chomp on. And at some point that will come into play. Of course, I don't know when, but it's something to think about. It's something to consider. Definitely keep your eye on this 200-day moving average, because the combination of getting above this 200-day moving average, as well as this bearish fair value gap, as well as breaking out of this inverse head and shoulders pattern, those are three unique features that could be propping up the price in order to move it through this weak doji and up to the equilibrium zone. We'll have to keep an eye on that, see how this turns out, and then make another assessment later. But be patient because it is going to take a little bit of time. But at the same time, this is the crypto market, and you could literally blink and wake up and see a green candle just coming up here to the equilibrium line. But like I've told you in many past videos, the equilibrium line in the center of the equilibrium zone acts as a magnet, drawing price to it. Once price gets to it, it tends to repel it. Now, which direction it's going to repel it, I don't know, because we also have a bearish fair value gap right here that's kind of blocking upward potential of this equilibrium zone and this pattern overall. And that's not going to be easy to get through, especially at this level. So that's just something to keep your eye on. So thank you so much for watching this video. I appreciate each and every one of you. Please do me a favor and hit the like button. It doesn't cost you anything and it helps the channel, and I'd really appreciate it. If you'd like to join my Patreon, feel free to check it out. The link is below. We've had about 100 people join in the last week or so, which I'm super excited about, and I just want to say thank you to everybody who has joined. There's going to be a lot of little tidbits in there that you're really going to enjoy, as well as some personal things that I normally wouldn't share on the YouTube channel, because I'm at least able to protect them a little bit better on the Patreon than I am for YouTube. And I certainly don't want a situation like in a Stephen King novel, like the book Misery, where someone shows up at my front door, professes their love for me, and next thing you know, I'm getting my ankles snapped with a sledgehammer. So thank you so much. Have a great day.
No, you're not!
Under Rowdy's time.
Well, it might have been better if he cracked up the car.